Hey everyone, welcome. If you want a car in California, you already know that the costs can feel, well, pretty relentless. Today we're diving into the two biggest expenses you face, your car loan and your insurance. And in the next few minutes, we're going to break down exactly how you can tackle them and hopefully find some serious savings. Now, just so you know, all the data and insights we're covering today come straight from the fantastic resources over at myfinancialprograms.com. We've boiled down the research for you, but for a really deep dive into all the numbers and tables, you'll for sure want to check out the link right below this video.
So why are we talking about this right now? Well, for starters, Californians are already paying a whopping 20 to 28% more for car insurance than the rest of the country. Ouch. And as if that wasn't enough, a brand new rule change just kicked in that's making things even more complicated.
Here's our game plan. We just touched on the challenge. Next, we're going to decode car insurance, then crack the car loan code. After that, it's all about your smart savings playbook with real steps you can take. And we'll finish up with what to do next.
All right, let's jump right in. Section 2, Decoding California Car Insurance. We're going to get a handle on what's new and, more importantly, what it's actually going to cost you.
So here's the big news. As of January 1st, 2025, California basically doubled its minimum liability requirements. And this is a huge deal. I mean, it's the first time these numbers have gone up in over half a century.
So what do these new numbers actually look like? Well, you're now required to have at least $30,000 for injuring one person, $60,000 for multiple people, and $15,000 for property damage. In insurance speak, you'll hear this called 30-60-15 coverage.
But, and this is really important, think of these new minimums as the absolute legal floor, not a smart recommendation. Seriously, one little fender bender with a newer car could easily blow past that $15,000 property limit. And then guess who's on the hook for the rest? You are.
All right, so with these new rules in the mix, what can you actually expect to pay for insurance on a new car?
This table gives you a really solid idea of your monthly premium. Just find your car's value on the left, and you can see how the price changes depending on your coverage, from the bare bones liability to full coverage. But you might notice something's missing here. Where's your credit score? That's a super unique California rule we're going to talk about in just a minute.
Okay, so that's new cars. But what if you're buying used? Well, the math changes quite a bit.
And the savings here are pretty significant. You can see the monthly premiums for used cars are way lower all across the board. Just to give you an idea, full coverage on a used car that's under 15 grand is almost half of what you'd pay for a new car worth over $60,000. That's real money back in your pocket.
So how do you choose? Well, for a new car you're financing, the choice is pretty much made for you. Your lender is going to require full coverage. It's also a really good idea to get gap insurance, which covers that gap between what you owe on the loan and what the car's actually worth if it gets totaled. But for a used car, here's a great rule of thumb, the 10% rule. If the annual cost for your collision and comprehensive coverage is more than 10% of what the car's worth, it might be smarter to just go with liability only.
Okay, let's circle back to that unique California rule I mentioned. Unlike pretty much every other state, insurers here are not allowed to use your credit score when they're calculating your premium. This is a massive win for consumers, and it puts the focus on something else entirely.
So if credit doesn't matter, what's the number one thing that does? Your driving record. Simple as that. In California, it is everything. One little ticket or an at-fault accident can jack up your rates for 3 to 5 years. It makes safe driving the absolute best way to keep your insurance costs down.
All right, let's switch gears and move to the second big piece of this puzzle, your car loan. Getting the right rate here can literally save you thousands of dollars over time.
When it comes to new cars, your credit score is king. Just look at the difference here. A score over 750 could land you a rate as low as 5.24% from a dealer. But if your score drops into the 600s, that same dealer suddenly becomes your most expensive option. So the takeaway, if you have excellent credit, dealers can be really competitive. If you don't, you need to look elsewhere first.
Now, let's look at used cars. The first thing you'll notice is that rates are higher across the board, which makes shopping around even more crucial. But see that pattern? Credit unions are consistently the most competitive choice for almost every single credit level. That's because they're nonprofits owned by their members, so they can often pass those savings right on to you.
Okay, let's just simplify all of this. Buying new with a credit score over 750, go ahead and check the dealer's financing options. For pretty much everyone else buying a new car and for almost everyone buying a used car, your first stop should be a credit union. It's that simple. They consistently have the best rates for the widest range of people.
All right, we've decoded the costs. Now for the best part, the playbook. Let's talk about the concrete steps you can take to lock in a much better deal on both your insurance and your loan.
For insurance, here's your 6-point playbook. First, bundle your policies. Second, and you've heard this before, keep that driving record sparkling clean. Third, if you don't drive a lot, ask for a low mileage discount. Fourth, always get at least 3 different quotes to compare. Fifth, you can raise your deductible to $1,000. That'll lower your monthly premium. And finally, check if you qualify for California's low-cost auto program.
And for your loan, follow this 5-step process. 1. Know your credit score before you even think about walking into a dealership. 2. Get pre-approved by a credit union or a bank. This gives you massive negotiating power. 3. Choose the shortest loan term you can comfortably afford. You'll pay way less in interest. 4. Put down as much cash as you can for your down payment. And 5, and this is a pro tip, do all of your rate shopping within a 2-week window. That way, it only counts as a single inquiry on your credit report.
We have covered a lot of ground. So for our final section, let's focus on how you can put all this info to work for you, starting like right now.
This is really the ultimate question, isn't it? Take a look back at those tables we showed you. Think about what you're currently paying for your insurance premium and your car loan. Based on what other Californians are paying, are you overpaying? If the answer is yes, or even just maybe, you now have the playbook to fix it.
So, to take that next step, check out these resources. MyFinancialPrograms.com has all the original data we covered. The DMV website has all the official state info, and MyLowCostAuto.com is where you can check if you're eligible for the state's assistance program. Thanks so much for watching.